What is up, everybody? Logan coming at you guys with another video here, and super excited to get into this one today as we've been having a really good week with the trades. And it's kind of crazy reflecting back. I've only gotten caught in two rolls this whole year, but they have been on much longer than any of the other ones. And that would be since the start of this year with how crazy these moves have been. Before we get into this one, though, if you guys could leave a like, a comment, and subscribe if you aren't already, that'd be awesome as we get into this one. A couple things I want to touch on is, isn't it kind of wild that last week we got a lot of news about the banks failing and the market is rallied 126 points. So I think that's one thing, right? Like if it was at that easy to just short and investors pull their capital, everybody would be rich already. But the market makers like to make it tough on us, right? There's a lot of the big thing with trading is the psychology, right? It's like knowing what to do and when to do it. Granted, this has been like a field day week for me, and ever since the banks did even start having issues. And if you take a look at a lot of the big regional bank funds, they are down massively. DPST is a triple leverage version of the regional banks, but if you just take a look at a lot of those holdings, they've just been getting crushed, right? It's really interesting to see though, but I do want to take you guys over some of my trades. We've been doing just one DTEs, as you guys can see here. Everything I've been putting on, anything around that 3,800 level when we were down right around that 3,850, that 3,870. The VIX was a little bit higher. The VIX has since then just gotten absolutely obliterated. Look at this, gone up to 26. And a lot of these intraday moves were actually up to 30, but then it would crush by the end of the day. And we are coming back down to that 20 level, which you guys know me and my VIX, right? 20, 25, 30, 35, and 40 are the VIX levels. You got to pay attention to what the market does around those levels. And today was a pretty solid VIX crush. I mean, over 11%, just ripped out of volatility. And that's coming from the rate hike is actually going to be a quarter point. And a lot of people are expecting it to be half a point right out of the gate. But now that it's priced in to be a quarter point, people are putting that risk back on, right? Like knowing what to expect versus shell shocking. So I would assume if tomorrow does come out, 50 basis points, because that's the Fed rate decision at 2 p.m. Eastern, then we're going to have a little bit of a mix up. Then we're going to see maybe volatility pick back up again. But even, Powell, I'm going to assume is going to want to do some sort of soft landing with it. Just because, he mentioned it a little bit as of recent, but he's gone a little bit more full-fledged ever since the data came back out hot. But back to what we were doing, the 0DT checklist over here, that expected move math that we do in the Discord, and that's over here. If you guys would like to come trade with us, the link is below. But we were taking a look at, this was for Tuesday. The VIX was very low. But overall, I had a put credit on, and I had one all the way down. If we go back to Logan's callouts, right here, 38.70, 38.65. We just scooped 35 cents, a nice 7% return. And we were at 39.50 when I put this trade on. And right, we have the 200-day here at 39.40. And then this has been a massive level as well. 3,900 has drawn a lot of interest. And today we actually gapped up massively. I'm not going to have a trade on for tomorrow until after we see what the rake height percentage is. And that's just something for my own personal mental capital space too, right? We have physical capital like money, but you also have mental energy and mental capital. So you want to really pay attention to where your energy is flowing, right? Your mental capital, your physical capital. So that's one thing is I don't want to be mentally tied into a play and then the rate hike come out and totally mess with my plan. So usually I just try to skip this as much as possible when putting on a fresh trade. But overall, a lot of these trades have come from taking a look at the expected move towards the end of the day, right? And slapping these on and saying okay, and I talk about this quite a bit, but hey, a 2% down mark, we're good 91% of the time. We're getting 7% on that trade. I'm going to take that trade every time with the amount of support that we have below us at that level. And last week, everybody and their mom actually was buying puts. There's extreme fear in the market. The market makers love to just ping pong everybody in these bear markets. And, if you look at even since it started, look at this. All this has ever done is just chopped and just it'll shoot up one way. We'll get those those bear market bull rallies, right? Before the bear market continues. So one really interesting thing, and I think that's what we're coming into here, as this 4,200 level has always been this resistance zone, 4,100 as well. And we're pushing our way back towards those spots, and I think that could really set us up for a next leg further down if the bear market is going to continue. So gap up or gap down, we actually had a massive gap up today, which helped that one DTE. And the gap didn't fill, so that gap's going to fill at some point. We're going to head back to 39.50 at some point. Not sure when that will be. It could be tomorrow, right? Whereas the VIX showed you guys we're down at 21. Did we exceed the expected move the day prior? We've had some pretty big green days, and you can see that we continue to just head straight up, not exceeding the expected move from Monday, which is cool. And then same with today. Today pushed up 51 points, but that actually did exceed the expected move because it was 37. So as the volatility gets lower, you're going to see the expected move we're going to see the price push out of those zones. But in general, like, that's to be expected because we're in a bear market where volatility continues to fluctuate. And a normal bear market, I would say, like, look at how the volatility fluctuates. But if you look at 5 years ago, we barely had any fluctuation at all in the VIX. It was really high and elevated through most of 2020, but that was because of COVID fears. And then the bear market took over and has just completely changed the game. But even if you guys look back here, I mean, this was a steady, that was a good 6 months of just no volatility action. Got a little bit late in 2018 and then stayed pretty relatively stable. But gosh, these moves are just wild, right? So I've just been doing those 1DTEs. Just because they seem to be so nice to just slap on, and there really isn't too much for us to look on. And like, even when the market was getting crushed down to that 38.50, I was like, gosh, dude, any trade below 3,800, like, we got 12% on this one back around March 13th. It's like being able to slap these 1DTEs on, because yeah, you have overnight risk, but if you have the overall trend right and like know your price levels, like, hey, if we go over, SPX 39.40, expect us to go towards 4,000. You can still give yourself a good buffer, get a good return. And then also, you're not having to hold a trade for 3 to 5 days, or even 5 days or 10 days, because the amount of volatility we're dealing with, like, holding a trade just sucks for a few days, right? Like, if you started to go along here and you all of a sudden flip to short because you had a trade that was 3 days long, and then you're getting pushed back up on it, like a 1DTE, and a lot of my shorter term 0DTs sometimes as well, you're in and out. Like, you can take that risk on and take it off instead of having to constantly watch what you're doing. And if you have good market awareness of, like, what did we do last time we were in this zone? What is my risk? What's my portfolio risk? You can really put really solid trades on and then just go from there, right? Continue to set your goals, refine your risk, because that should be your whole goal as a trader. Anybody doing anything that's odds based, you always want to set the probabilities as much in your favor, but also know that if there's a chance that it can't work out, like if something has a 95% chance it will, just always remember there's a 5% chance it won't. And that happens sometimes. That's always something to be very mindful of. Where are levels? 4,000, we pretty much hit it. And we're going to see now if Powell will push us further up. I could see us making that run to 40.50 before maybe stalling out for a little bit longer. Position sizing, just that good 6% of the port on a lot of these initial trades, because you can really scale an account if you're doing everything the right way over a year's worth time, just taking trades at the right time, keeping the right amount of risk on, and not oversizing and trying to get greedy and hit a home run, because trading really is just hitting a lot of singles. And then you still win the game doing that, right? So how I choose my strikes, I've just been using that 38.50 level. Like, if we go back to SPX, look at it over the last month, even the last 6 months, like that 3,800 zone to 38.50, anytime you're above it, has just acted as such quality support. So anytime we get that opportunity and get lucky enough to get a sell-off for, from 4,050 all the way down to 38.50, like a 200-point drop, I'm definitely getting underneath that almost every time when we have 3,800 below us, right? And that's where I place a lot of my trades. So for me, being bullish at this point was pretty bread and butter. considering everybody was fearful, extreme fear in the markets. They were buying puts last week. They were trying to short the market. And when that happens, the market makers will flip this back the other way. They're just playing ping pong. Look at how much ping pong they played the last 6 months. Like nothing too dramatically in one direction. So much chop. Like back in November, we had a month straight of just chop. These guys are just playing ping pong. So you just have to find your way to swim through the stream of ping pong players, basically, these market makers. But yeah, that's one thing. And that's why I've been doing so well and having just massive runway on these trades. We scooped 9% back here and we filled for 45, some filled for 50, and you're able to just slowly stack your wins, and I think it's a nice way to kind of survive this bear market. I know a lot of people have gotten crushed in it, and that's one thing with the markets is they're a beast, especially in this time period because there's so much uncertainty. But I just want to say that real quick. I do want to say I appreciate all the YouTube support as always. You guys are the best for that. And over 12,100 subs is a dream come true. So I really appreciate all the support. I want to say that really quickly, but that is going to be the end of the video for me. We're going to talk a little bit more in the next one. Hopefully I can have it up tomorrow so we can kind of overview what Powell is talking about and where we're headed from here. Personally, I'm slightly bullish just because I still think there's a lot of fear in the market and they want to get the VIX to 20. Generally, when that VIX taps 20, and if we go take a look at the 1 day, we didn't even get close to it today, but I would assume they want to go tap 20 on the VIX before they hike us back towards the moon on the VIX with volatility picking up. But anytime we spend our time chopping around that 20 range, we get some sort of push that brings the markets down in this bear market. But that's going to be everything for me in this video. I hope you guys enjoyed. Make sure you leave a like, a comment, subscribe, like I said earlier. That's going to be everything for me, and I'll see you guys in the next video.